from Cryptodemia, the Academia for Cryptos. And in this video, I'm going to show you how to use the support and resistance levels the right way in the cryptocurrency market. Make sure to watch till the end for my bonus tip, guys. So, okay, as you can see right here, guys, I'm in the BTC USD chart. Let's go to the 1 hour. Hold on. The 1 day, sorry. So, guys, this is how it goes. Give me 1 second, guys. My computer's kind of laggy right now. So, as you can see, we have these lines, these red lines right here. Let me take off the EMAs for a second. So what these lines represent, they represent support or resistance levels. And I'm going to show you how I got to these levels right here. So, guys, this level right here, what we're doing as a technical analyst, guys, is we're trying to find patterns. We're trying to find previous patterns that are going to help us try to predict the future and try to predict future price action. So whenever a line is above the price action, then it's actually a resistance level. Whenever the line is below the price, then it's a support level. Okay? So how do we find these lines? So, guys, what we're trying to do is we're trying to find patterns. So as you can see, the candles here are very close, and they close in the same exact point. As you can see, we see these lines right here closing in the point. We see these ones too. We see the wicks going up and down, and then they shoot right up. So what this represents is that the bears had taken control. They took the price down, and then in this very, very crucial level, the bulls took over again and rose the price, and then rose the price again, put the price down again, and we don't see a wick in these, but we do see, you know, in the cryptocurrency market, it's not like stocks or forex. We see a lot of manipulation. I mean, in the other markets, we do see more. We see manipulation, but at least there's some regulation to it. So like small chumps can't go and manipulate the price how they do in these markets. So that's why we are more lenient in regards of grabbing the lines and we don't have to put them exactly where the candle closes or where the wick closes. Okay, we actually kind of use a little bit of average, and once you get a little bit familiar with this, you're actually gonna have an eye for it, and it's gonna come second nature. So as you can see, all these lines were trying to cross this line, so which means that there's a lot of support here. There's a lot of support, a lot of support. And then the price rose, whatever, it broke the support, which means the price was going to actually drop. So as a technical analyst, once we see this drop, once we see this cross here, we would actually sell. And we see that the price went right here. Now it's a resistance level, guys. Since it's trying to go up and trying to cross it, now it became a resistance level. Okay? So it's trying to cross it again, and since it didn't, it actually it got canceled out. Then that's actually more of a sign of a bear market, guys. It means that in the short term, price is going to drop. So if you see this happening, I mean, as a technical analyst, you would actually sell some of your coins, maybe pull some profits, and then the price dropped. Okay. And as we can see here, it didn't even hold in the other line, in the other support line that we had. So once we see this happening, we would sell it. We made a good decision here. Okay, that just confirms that we made a good decision. And as we can see here, we have another support line. So how we're getting into these lines is this. You see right here, we had a one test of support. So it held really well. And if we go to the previous candles, we see that these candles also held really well. So this shows us that this is a very, very strong support line. So guys, I want to show you something that many technical analysts fail to do. And for this reason, they actually lose a lot of money. Instead of having the lines, guys, you actually need to have a zone. You have to have a specific zone. And do not just move when the price breaks through it, okay? You got to have this zone, and if it breaks through this zone, then you actually know that that price might drop. Okay. So currently in this market, what's going on? I'll give you a small market breakdown, guys. Is the Fibonacci? We'll talk about Fibonacci later, but the Fibonacci levels are very strong, and if this price drops through here, if it drops through 7,800, it's actually going to keep going because it's going to break market structure. And I'll explain to you in other videos what market structure is, but it's very important to hold these structures, because if not, it'll just dip to maybe the 4,000 levels. That's why, like, if it goes under 7,800 and all the way to 7,500, if it goes lower than that, I'm actually gonna exit most of my my assets, my capital is gonna exit from the market. So let's keep going with the support and resistance levels. So guys, as we go and we see in the past, we are actually able to see more and more support and resistance levels. As we can see right here, the candle tried to break right through. We see this long wick. By the way, guys, these long wicks mean market manipulation. Okay, that's what all it means. So once it goes down, it went back up. We saw that it actually held really well twice in 2 candles. Then it went back up, and so on, guys. So there's plenty of resistance and support levels here, but we want to have the most important ones, guys. And I'm going to show you right now how to find the most important ones. So guys, the second way to find support and resistance levels is by using technical indicators. Mostly I use EMAs, exponential moving averages. So let me put it for you right here. So what an EMA is let me put the line a little thicker so you can see it. So as you can see this line right here, the line shows you 2 things, guys. What this means is, as you can see right here, it says a number, it says 9. So what this is doing is grabbing 9 candles, 9 previous candles, and doing an average. And since it's the exponential moving average, it actually grabs the price action of the current price, and it gives it more importance. So that's why it's more accurate than a simple moving average. Although the simple moving average has its uses too. Now, one of the most common ones is the 200, guys, which means it's grabbing 200 candles, the previous candles, and showing this. So guys, the longer the EMA, the better, because it actually shows you where the trend is going and where the trend is headed. And as you may know, if you've ever heard this saying go, the trend is your friend, well, this helps you with that. Although, guys, don't get caught up on the trend is your friend, because the full saying goes like this: the trend is your friend till the end. Okay? Trends always have a reversal, guys. So you got to be careful with that. Now, let me talk about this. So, whenever the moving average is above the price action, then this means that it's actually serving as a resistance level. And as we can see right here, this is actually a really strong resistance level, because it's actually hitting our previous line. It has shown to be really strong resistance. So whenever we actually break through this, it's going to be a huge sign of a bull market. Now, I honestly believe that we need to cross the 10,000 levels in order for the bull market to be activated. But as you can see, this is a very strong resistance level. Now, if the price was above it, then this would be actually a support level, guys. This would be support, and it would show signs of very strong support. Okay, so like say like we were right here, then this line would show signs of very strong support. Therefore, when it broke through it, that would be very bad news. Therefore, you need to have a strategy for that, an exit strategy. Now, guys, this is not the only one. This is just one of the popular ones. You could also use the people like to use the 150. They like to use the 55, and they also like to use simple moving averages. That just depends on your trading strategy. Okay, so let's just put the 55 so you guys could see the difference between both of them. I'm gonna put this one as red. So as you can see, the 55 shows more volatility. And many times is good to have this because it's a little bit more accurate in regards of current day to day. So yeah, this is another way to see support and resistance levels. So yeah, now let me talk to you about my bonus tip, guys. I'm gonna show you how to find crucial levels, guys. I'm just gonna erase this, guys. I'm gonna erase it all. And as a technical analyst, there's this thing called top-down analysis. Okay, so what this means is that you grab any chart that you're doing and you take it down to the absolute furthest, which is the 1 month. And sometimes there's not enough information. Okay, so like in this one right now, there is enough information, so that's what we could actually use this. So right now what I'm doing is I'm putting it as small as possible, and these lines actually show you very, very strong support and resistance levels. So what you're grabbing is you're doing this, then you just start doing top-down analysis, which is like this. Just look, we saw that these two candles closed right here or opened right here, so it shows a sign of strong resistance. So sorry, strong support. Then right here we see another one. Okay, now we do another one right here. This one let's see. This one's actually showing us two. Okay, this one's showing us this one right here, and right here. And we're looking at, we actually see one right here too. You see this one, the 9,200. We see these two candles right here showing resistance. So we could do that one too. Now guys, the idea of this is not to fill up your chart full of lines. Okay, the idea of this is you're doing top-down analysis. You're doing a month, then you go to the week. Okay, and then you see where your price action is and where it's closest to. And then if we see that these lines that are very high up here are not really helping anything, then what we're doing is we just erase them. We're cleaning out the chart. We want it to be as clean as possible so that it's easy for us to make our predictions and our statistical advantage here. So as you can see right here, we have this 55. In the weekly, it actually shows to be a support line, guys. Okay, remember guys, this changes every time you change this, because whenever you put a candle to be weekly, this means that each candle is a week. Okay, so now it's grabbing 55 weeks, not 55 days. So it's actually showing to be a support here. Now right here we would do other lines. Okay, we're in the weekly, we grab the horizontal line. We see that there's a very strong line right here to be put. We put it right there. Now we know that we were very, very close to breaking that. We're very close to breaking this. So we know that there's a crucial point right here. If we break through this and the candle closes under this, we know that the price might drop to this level. Okay? Now that's what we know so far. But if we go to the 1 day, it might tell us something else. Now we're in the 1 day, guys. So now what we're doing is we're trying to find another good point. So as we can see, we see some candles here. This one's a little more complex right here. You see, we have a lot more candles to play with. So we have these candles, and now what I'm doing, guys, is I plot this line, and instead of having so many lines, I just have some target zones. So I just grab this rectangle right here, and I have this target zone right here. As you can see, I have this zone. Now I can erase this line right here. And now I know that we have this zone that if it actually drops down from this zone, we could be seeing this. But then again, we could see that there's another line right here. So that's how I grabbed. That's how my prediction to 7,800 and to 7,500 was taken. That's how I found this, guys. So now you see I got these levels. Now, guys, if this breaks through these levels, the market structure is going to break. Therefore, it's going to go even lower. I don't think this is going to happen because of there's another way, by the way, to find support and resistance levels, which is called the Fibonacci retracement tool. Which, I mean, I've shown it to you guys, but I actually want to talk about this tool later. But I'm just going to show it to you briefly. So here it is. I'm not going to explain to you in this video why I'm putting why I'm plotting the points where I'm plotting them right now. I'm going to explain to you that in another video. So make sure to watch it. So as you can see, guys, the Fibonacci retracement is actually showing us where the levels are very close to. So this actually could make us create another target zones right here. So you see the chart is actually talking to me and saying a lot of things. You see the 61, the 78, we got them all there. Now we got our target zones here. We also, if we wanted to do for the upside, we could do the same thing, guys. Right now I'm just doing it for the downside because I currently believe that the price is going to go down. Okay, so if you like this video, hit the like button below, share it with your friends, and be sure to subscribe. Thank you for watching, and I'll see you on the next video.